The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 29th of July. We're looking at the Dow kind of stuck. It's down 2 at 44,831. All it has to do, like 100 and something points, and boom, you're at an all-time high. Hasn't been able to do that yet. It's been 4 sessions we've been watching since the 45,016 high, which is above the 44,855 high of beginning of July. It's kind of struggling here. Look, it's above the 9-period moving average, but the price is getting closer and closer to the 9-period moving average. The green 9 is over the 14. That's still really positive. I mean, we remain long. The Dow, looking to see where we're going to start a short position. Haven't yet. Look at this. The MACD coming down. The relative strength, that's the gray line, kind of not weak, but it's pulling back from recent highs. The stochastic's good at 86%, and the on-balance volume is still good, pulling back a little bit. So there's nothing really technically here other than the design, the Chapman wave methodology, where you look at a cup formation and it breaks out from the previous high. That should have been the arbiter of a move that quickly went within a bar of pulling back. It should have been up at higher highs. So this stalling formation gives it the look of a bit of a cup and ladle, not one of my favorite patterns. Actually, the longer we go sideways, the greater chance you'll test the middle part of this candle right here, and that's the candle of the 22nd of July. High of 44,540, low of 44,272. So I'm watching this very closely. So you say, what's the big deal? So the big deal is, look, you've got United Health down 11 points at 270.6. You remember I said this had all the characteristics of a Chapman wave climactic low on the 15th of May at 248.88, where you get this huge gap down, and then a final where everyone throws just everything out with the bathwater. You remember the expression? And what happens is that you get this incredible volume, and you get the price low, and you get what I call the Chapman wave volume price climax low. We saw that in Charles Schwab back in May of 2000, I think it was 2023 or so. Anyway, and then it to this day, it hasn't gone back to that 45 level. So look at this. The reason why I said, no, this is not one. I had questions. Are you going to have a bicycle? Because your rule is that it can go 28 bars without taking out that low. If it holds that above the, nicely above the low, you can go for 56. I said, I don't think that this rule applies here, because there are legal tangles. Once you get to the legal aspect, that just weighs heavily on the price of whatever symbol you're following. And that's the case here. Now look, it dipped down. It hasn't taken a 248.88 low. Today's low is 60.55. It got pretty close, right? 13 points. So with that said, you've got that. You've got just a couple of others that are showing some weakness. Now, a couple of things that I need to go through. Within the context of what we're looking at, why am I saying to subscribers, technically, we're getting closer and closer to at least the daily chart having some kind of a pullback. Well, I've been saying that for about 2 weeks. I'm saying that we haven't got the bad news. I have to have bad news that filters through the market continuously as headline news for at least a week or two to really get a sell-off that takes you maybe 8% or a little bit more down in any of the indices. We just don't have that. And as long as you don't have it, the bias it's like a cork in water. The bias is just to keep making higher highs. Well, with that said, look at these little candles. Unless I've seen this before, there could be one sudden spike, a big green candle that says, what were you thinking? Or you just start to see one candle on some bad news. It could be the Fed. I mean, look, the Fed. Oh, do I get that? Yeah, that's tomorrow. Okay, I'll have to get into it today. So the Fed has It has a target on its back, right? Not the Fed, but Powell. Let's say the Powell. And at the same time, he has something to prove. he has something to prove in the sense that he wants to show his independence, that unless he gets the information that he's looking for, and remember, they look historically back. They don't anticipate ahead. They look back to be able to change formulae, and that means it's history. So he could be wrong, but he won't know it for at least one count, one full, one full Fed, maybe open committee, whatever it is, some big meeting. And that'll take time. So it could be that he suddenly says, I still don't see any reason to lower rates. Actually, the markets, look at the market, all-time highs we're looking at, and it's with whatever the rate picture is right now, and the rates are still kind of high. For some of us who had 15, 16, 17% mortgage rates, this is nothing. But anyway, in the context of history, right now, this is one of the higher levels, and that's what the market is nervous about. So I don't know what it's going to be, but you have to remember, I had this out. It's still actually in place because we haven't taken out the Dow high. There's a Chapman with dark news index, but I don't see the dark news, so I can't put anything here other than the feeling that this pattern, we've seen it before, eventually turns down. It doesn't have to. I'm just saying that's what I'm looking at, but we haven't done anything. So as far as I'm concerned, I'm waiting for the evidence, but we do have a plan that if something, the inverse of whatever the index is that we're following, if it starts to go to a certain level, we're going to hop on board. I don't want to be trying to anticipate the turn every day because look how these things whittle away. Let's go to like the SOXS. The SOXS is 3 times short. I always do that, type it on the wrong chart. There it is. Type it right here, click. SOXS is 3 times short the semis. Look at this. So you buy it here thinking, it's only at 7 or 750. What's the big deal? The big deal is you've come down to 6.92. You know what Tommy always says? The percentages when you get to small priced symbols, the percentages can be very big, but it's just because they're very low priced. But that's the same thing here. So you've gone from, say, 750 to 690. Well, that's a 10%. That's 10% of your money. It doesn't matter how much you put in. So then you've got to be real careful. So I'm trying to say, if I start to see something like this, not this one in particular just yet, but if I start to see it move in a certain direction and get certain characteristics, that's when I can say, okay, then the inverse, which in this case is the SMHs, which are all-time high, even as we speak at 296.57, amazing, huh? And this is still a leg B, and the leg B I've been saying since it broke above by 1 penny, the high that was made in the week of the 16th of May of 249.44, the moment it went to that candle of the 6th of June to 256.06, that candle starts leg B. And remember, in Chapman methodology, these are legs. It makes a peak when there's a lower high. You have to wait for that. So if today is Tuesday, even if today it pulls back and all the way through Friday, all the way through next Thursday, it hasn't gone up. Let's just imagine that today's high is 296.73, and whatever the high is goes all the way through Wednesday of next week. I cannot call that a peak B until the Friday close, because if it makes another high all the way from now to next week, that continues leg B. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of a leg B. Amazing. From 170 down the April low to where we are today, 295. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So just yesterday I was talking about how so often, sometimes in June, but a monthly chart is just down, 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 and then out of the blue, the last day or two before the end of the month, there's this huge surge to the upside, and then the following month has a higher high. And what you see is within the chart pattern, the turnaround starts a little bit before the bar, especially if you're looking at a weekly bar, maybe a monthly bar. And I didn't quite finish my thought, because what I wanted to do was the corollary, which will be on the upside, which is the only thing I'm thinking of as a possibility, because you've got to look and say, okay, what are the things out there? So, of course, there's always the unknown, just things happen and nobody can anticipate them. But there are possible knowns. And the one is that maybe the Fed, just because he's got absolutely nothing to lose, Fed Chairman Powell, if he wants to stick to his methodology, then this is the time to do it. And if he decides that the course of action is no action, that might worry the market. So now we get to the other side, and the other side says that if there's going to be a sharp turnaround, and with the day, the 1st of August being, I should know that because we got first Saturday is the 2nd, 3rd, 4th. Yeah, that's right. So we've got Friday. So what we would see is that by about late Wednesday, going into Thursday, going into Friday, there's a turn down. And for the first time, you're going to see that I'm not saying we will have it. I'm saying this is my looking at the markets, because we are all long. We only have long positions. We have the possibility of a short position. Haven't got it yet. But most importantly, I've started the rotation into some sectors that maybe we're starting to see some strength. I don't know if it's going to be. Two of them have the earnings coming out in the next couple of days. We'll see if they even survive that. If they survive that, that's going to be quite a tell for me. Now, what will happen is, let's just go to the semis. If there is the sudden market turn down, and let me just check here. This is the high of the week of the 18th of July is 293.33. The high of last week was 293.53, 20 cents higher, but it's higher. Therefore, this is continuing leg B. Then what we will see by Monday or Tuesday of next week, I'm just using this as an example. It doesn't have to be the semis. But if it's going to happen, you will see that the low of this week so far, the low of this week, what are we? That's yesterday's low. That's the low of 289.29, yesterday's low, gets taken out, and there's weakness all the way through to the following Friday. So that's just a scenario to say you've seen it on the upside, on the downside occasionally. On the upside, we have seen it, but we haven't seen it for quite a while because of this incredible move from the 7th of April low. That wasn't the exact low on almost all the indices, but a majority of them. All right. So with that said, what we're going to do is we're going to go to what would the scenario be, say, for the S&P? That was a question that came in last night. The S&P would be underneath. So this is today's. It would be underneath the low of Friday of 63.68. A huge candle that closes sharply underneath it, especially now that we've got all the indices at either peak D or leg D, or maybe an E or a peak E. This is the time. If it's going to happen, this is the time. So this meaning into Thursday and then Friday at 10 o'clock during the show. Okay, we'll see if that's going to happen. And as I say, you can't get anything but a minor turn down unless you get that full throated news-related event that has within 3 to 5 sessions how Boston Globe will have it as a headline, or the Wall Street Journal, whatever it is. Okay, that's what I'm looking at. That's how you get a sustained move to the downside. Bad news, we haven't got it yet. Okay, now with that said, we wanted to go to questions, but I'm going to first go high-grade copper. Is trading up a little bit, but it had a very ugly candle yesterday, but the 9 is still holding well over the 14. That's at 566. I would just say that if it takes out the 540 in the next couple of days, that's going to be a problem. But so far, it's held very nicely. We still have a copper stock, and it's holding quite nicely from the entry point. Okay, now, what did I want to do? I wanted to do that. Just wanted to go to Bitcoin quickly. Bitcoin is up 230, stuck in that. These rectangle formations last a long time. Normally, they last a long time, and the result is that there might be one little pop above the rectangle high, not the all-time, not the major high, but the rectangle high. And then you got to be careful, because then if it takes out halfway of the, in this case, 100, if it closes on a daily basis below 119,000, there's a good chance it's going to retest the low that was made 3 sessions ago at 115,675. But it's just stuck sideways. We're still holding our long position, saying it's still looking pretty good. But look at that pattern. Oh, I had a question, and the question says, what about Eli Lilly? Look at this. You see the pattern on the left? Look at this pattern on the left. You see the Dow's pattern on the left? Daily chart, rectangle formation. Have a look at this. Eli Lilly. What do you see? You see sideways action, pops over, and then goes whoosh all the way through the rectangle formation. I didn't draw that in here. Rectangle from right there. The rectangle formation goes to a leg D under the previous high, which was peak D. How many peak Ds do we see? And now it's pulled back sharply. Today's low is 755.18. It's trading at 771. Hey, that's a nice bounce off the low, but what a gap. So the question is just a question. LLY, and I'm just going to say to you, I don't like the action. I don't like the weekly chart. I don't like the monthly making lower lows and lower highs with the Chapman wave dreaded H formation struggling to hold above the left side low. I think that this is stuck. If it goes back to 789, it's at 769 right now. Anytime next week, that's good action. It says, in this case, it's the opposite, that you could go sideways for a little while and then try to tackle the 820 high that was made just yesterday. But if it closes, and this is my thinking right now, if it closes below this low right here, that's the low of the 20th of June, of 755.56, it's just open season, because there aren't any support levels right there, either in the daily or the weekly chart. Be careful with Eli Lilly. They were the in stock going to the 2024 high in the 900. What was the exact high? 972.53, August of 2024. and that's it. Making lower lows. It has an equal move. Look, A to B equals C to D. This is not Chapman wave methodology. This is a lightning bolt pattern, and now it's just holding in fashion, trying to recover into the 820s, but it's really struggling to do that. Be careful. Okay, next question. Okay. So let me do this. So we had this that starting off on a weekly basis. If there's a sudden move up, the following week chart has to be way off that low, and then all of a sudden you can see that a candle that was looking absolutely terrible suddenly looks great. And that's the exact opposite of what I'm anticipating would happen. I don't know what else there is, but let's say it's Powell tomorrow, okay? And if going into Powell's talk, things are quite good, but by the end of the day we're down 270 in the Dow, down say 43 in the S&P, and the next day, Thursday, is very weak. That'll be a hint to say, okay, now we've got a theme that says we could pull back for a little bit. We haven't got that theme yet. I'll be back in a moment. Dow is down 34, S&P's up 6. This divergence has been continuing for a little while. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So just had a question about the QQQ weekly chart in leg B. What about the NQ? That's the futures in leg B. So I hope that helped you. And I've thought about this a ton. And what's happened in the weekly chart, in the monthly chart, whenever I put a down arrow and there's a huge discrepancy in the strong 914 above the 14-period exponential moving average, I always come back and I say, oh, that really wasn't the high, even though it was a massive pullback. But I really don't have any choice. We're coming to the end of the month. I have to consider this is a new leg A. I mean, I don't know what to say. I'll put it in as an A, an F/A, and we'll have to decide later. But everything about it is so strong in the monthly chart. Anything can happen in August, but that's the point right now. Okay, so that was the next question. Another question was, could I look at GLXY? Oh no, what did I do? Type that into the wrong place. GLXY. I'm going to find out if I made a horrible mistake. No, I didn't. So this is Galaxy Global Crypto, leg F in the monthly chart. Hasn't taken out the all-time high of 35.10, but it did get to the 33.60, was it? 33. Yeah, look at that. So this is a high on the 24th, and you've got 33.17 at peak D, and now it's pulling back from peak D. So this is, there's no other way I can count it. No, I can, because it didn't take out the starting point of the low right here. ABCD. No, it did. So there's no other way I can count it. I've got this as a leg C in the weekly chart, Galaxy Crypto. So the question was, if this is a longer term buy and it's only at a C in the weekly chart, is this like a buy and hold? Yes, it is, but only because I'm anticipating a D. That doesn't tell you anything about intra-week. I mean, we could see anything. What if it goes from all the way without canceling the buy signal, because that only gets canceled if you go down to the low of 17.40 and it's at 28.23. But it could, in fact, go down to 24 or 25 or 24 and then start another ABCD in the daily chart, which will eventually get you to a D. So I'm just saying, yes, in the Chapman methodology, there should be a D. You remember, I've got this as IBIT as only a B. Because look, F goes to say G, there's never an H. You have to think of maybe there's a restart. There's a whole bunch of other things that you have to do in the Chapman wave methodology because you've run out of letters. So this becomes a B. That's still very positive. But if you go to Bitcoin itself, you remember I have this as a peak D in the data. Look at that sideways trading band. This is the one we've watched a couple of times today in the different charts. And look at the monthly chart, leg E. So this says it's only B. It should still go to a C and a D. All right, so that's Bitcoin looking very good. So the answer is yes, but that's got nothing to do with the volatility that you would see in between. I hope that answers your question. Then came CLF, which is Cleveland Cliffs, which we wanted to get in, we did get in, and then we got stopped out by a fraction, and then the darn thing just zoomed to the upside, went to the 1190s, and there it is at 1080. So the question is it a buy here? On the weekly chart, in a leg C, probably a peak C, because we've still got the whole week to go. I don't think it's going back to 1196, 1197 would start a leg D. It could turn around, but I don't think it's actually going to have that kind of power for the next couple of days. There's another sideways, but making lower lows and lower highs. So the answer is, this is the early stages for some of the, look, X is gone. After all these years and years, it used to be USX and it was X. It's gone. That's US Steel. So what's left? You've got NUE, which is a new core, trading down quite sharply today. So this one, this is one that I knew was going to be an issue when I typed it in. So look what it did. It went to a peak F, it pulled back, and then it had a higher high, which technically should be peak G. Then it has another high, which is, what is that? Well, this is the pattern that I often talk about. So I didn't do it, and I thought, I've done it with others. If I do it here, it looks a little contrived, but I would normally have done this. I had this circle before, then I had to redo it because it didn't save. So look at this. This is a Chapman wave unconventional flat base restart. So look what happens. It goes peak D, pulls back with 2 bars, goes to leg E. So here's your Chapman wave instant restart within 3 bars. So I always circle it, but it doesn't say that it has to go to a brand new buy mode. It just says have alternate counts. But if that low from the peak D is taken out, be careful, because I don't know, why didn't I do that? I did that somewhere else, and I think it actually did what we were looking at. Normally I would do this. I wouldn't even put a left side, right side price time match. I just put this tiny rectangle across and say, you see this low right here of 135.94 with this zigzag pattern. Remember, this is the pattern that I call the Bart Simpson choppy hairstyle. It should go to higher highs. It can even go higher than a D. But then at some point it comes back, and not only does it take out the left side low, it can go under it. Well, this is exactly it. I don't even remember. I thought I wrote it in the break. I know I wrote it down somewhere of one of the others. So this is a Chapman wave unconventional flat base restart. That whole thing, that sentence explains the whole thing. And then what I normally do is I change the font. I change it to right there, very tiny, 9 or something. And I make this pink because it's so outrageous. And then I look back. Well, this is it. It just took it out after peak D. The alternate count E/A, F/B, G/C goes to a D, and then be careful. Whoosh! And a D in the weekly chart. So the answer is, I've got to be a little careful, because look, SLX, this is the steel ETF. This is a steel ETF, and it is trading at a peak G and pulling back. Peak E in the weekly chart, I think still could be pulling. There are so many hints. I haven't got the bad news yet, but there are so many hints that this is kind of getting a little toppy, the market generally. But that's just all based on the daily charts, not the weekly. The weekly and monthly are fantastic. So the answer is, whoa, that was a long way to say, not yet. Let's look at it again over the next couple of days. And if CLF can get down to the 200-period moving average, if it breaks the 14-period 10.30 and goes to the 995 area, that's where we'll look at it again. That's the place that I would look at it as a fresh or an added buy or a fresh buy. Hope that answers your question. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Question about XRPT, which is the volatility short-term. It's an ET, I think it's an ETF. Trading at 21.70, down 60 cents. Yeah, this is like got the Eiffel Tower straight up, straight down look to it. So I would just say if it takes out this low that was made on Thursday, I think it was, of 20.17, be careful. So I'm just holding off right now. Look at it, see what happens, because the next low is down at the 1887. So anywhere between 20.50 to 19.20, that's kind of what you want to look at, because if it takes that out, it means be careful. This has got quite a bit to go down, and it'll be back in play after a decent rest. Right now, it's still active. The 9's still strong over the 14. So on the upside, if by today's Tuesday, if by Thursday morning, and during my show, if it's in 25.5 or not, it's back in play. So let's just look at it. Right now, it's had a huge move. I think it's digesting gains. Microsoft mentioned there. Okay, Microsoft is trading. Made an all-time high at 518.29. Oh, so the question came in, and it's a very legitimate question, but I thought I was dealing with it in kind of a very practical way. And the question is, Basil, any reason why you don't simply tell subscribers to keep adding new money to a specific stock index after it makes a buy mode in weekly chart and keep buying until it achieves a leg D and then analyze? Thanks. So the answer is, in this particular phase, this choppy phase that we're seeing right now, the last 2-3 weeks, I've been wanting to add positions in low price stocks that gave a bit of a bang for the buck, which they really did, and conserving money for a decent pullback to actually do exactly what you're saying. But you're absolutely right. Look, Microsoft's been walking the 9-period moving average. All you had to do, looking back is so nice and easy. All you had to do was say, buy, 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 buy. Maybe even today is a buy. But you see, you're starting to look at risk, and you've got this incredible move. It makes a peak A back in April. That was still April, right? Yeah, April the 18th, the week of the 18th. Pulls back even down, not to the low that was made of 344.75. Remember, we still long from 338 way back. Look right over there, 2023, I think it was. Yeah. So every one of these bars looked, excuse me, looked like there could be a pullback, right? There hasn't been a pullback. So as it stands right now, it's a great point. But what I did is I said, we're taking excess money and we're putting it to work in low price stocks with a better risk reward, and we're waiting. And at this point, we're still waiting. But what I did, and you'll notice, what I did is I did go to two stocks that were in different sectors that could, if they hold through earnings, start a move that is replicating, say, the IWM, the Russell 2000 over the last couple of months. They're slowly moving higher. Not great, but just moving higher and higher. So that's what I'm trying to do. Just money, remember, conservation of your principal is the most important thing. That's what I've been thinking always. So the next question was, I'm not sure you saw my, I did this, 10 a.m. yesterday. You asked for Chipotle, and I did CMG. So this, in a way, is answering the question from a subscriber that I'm trying to negotiate through this maze. And what I did yesterday, so for CMG, what I said was, this is Chipotle. I didn't know all the charts. I used to have it all done. It wasn't there. I said, my rule, this is like a 3-bar rule in one thing when there's a huge gap down, but it's a multi-bar rule if it's on the upside. So what I said is, if it takes out, we weren't there yesterday. Chipotle had this huge gap down. It was trading in the 52 area, 51. Whoosh, it goes down to the 45s, and now it's trading at 44.53. And what I said is, if, I don't know if you're long or short, but what I said is this gap bar down, which has a high of 47.02 and a low of 45.13, if it closes over the high of that bar, that's going to be good. If it goes above, but then closes below the midpoint of this body of the candle, watch out, which is what it did yesterday. And I said, if it takes out within 2 bars, if it takes out, or 3 bars, if it takes out the low of the 24th, which is 45.13, be careful, because then you're getting stuck on the 200-period moving average, which is at 44.57, and all of a sudden that becomes glue. If it goes right through that, that's terrible, because then it becomes resistance. So it has to bounce off this level right now. So within 1.5 points, 1 to 1.5 points maximum to the downside. A close below that would be very negative. But right here is where it could have its first decent bounce. And what would the bounce do? We'd just try to get you into the candle with a low of 40, a low of 52.6. 43.13, the low of the 24th. Okay? So if it can get back inside here, that's like the inversion when you've gone above the rectangle. Now you're getting back into the rectangle. So think of this just for the moment as a rectangle formation. Normally I'd put it into the huge gap and I'd type in huge gap. But this we don't have to do it. You can see it. So this is it. Okay? So it's terrible action for CMG. It's right on the 200-period moving average. Do you know that it hasn't touched this 200-period moving average since, well, it touched it as a beautiful buy signal to buy mode back in July of 2 years ago, 3 years ago, 2022, and that was a week of the 17th of June, not July, June 2022, with a low of 23.93. And here it is, having gone all the way to almost 70, it's come back to 44. So, yeah, just be careful. And the more times you test it, the less strength it has. It doesn't become a propellant, it becomes a repellent. So be careful. Hope that answers your question there. Next question came in. Where do we go? Oh, it wasn't you yesterday. I can't remember. I thought I wrote it down, but I didn't. I just have CMG. Okay, next question. So look, here's Procter & Gamble, PG. Horrible double top, 180.43 back in 2024, and then 2025, 179.99 within $1, less than $1. And then it comes tumbling down. Cup formation is what I used to call the drop bucket formation, where the backhoe lifts up all the gravel and then just lets it out. And what happens, it goes to the 200-period moving average. But I said to subscribers, this one to me doesn't have quite the characteristic, even though it's hit the 200-period moving average in the weekly chart, the monthly broke really important support, and the 9-period moving average is pretty close to turning down. And it's in a sell signal. I've got to wait for the end of the month to call it a sell mode. And it is a nice bounce. So there were others that had the same type of lousy action, but slightly better chart formations. One actually didn't have a good chart formation, but it had the potential for a double bottom. So we've got into those two, and they're actually quite good dividend players, but I'm not using dividend at all. Remember my rule of thumb with dividends? You want a stock that gives you capital gain and dividend. There's no use seeing your capital gain disappear with a wonderful dividend. That doesn't work. So we've got tight stops. We'll be back in a moment. Dow's down 130.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So actually the question was clarified. The question is, since we're looking for Ds in the charts, why not on every major pullback or serious pullback add to the positions? But that's what I've been trying to do. I did fail once or twice, and sometimes we got in, but then we got stopped out, and then it went higher. So I love that idea. I'm trying to do it, but at the same time, the higher you go, I tend to want to take money off in the sense that it's money management. I had mentioned ages ago, if it was real, if it was a kind of newsletter that said, hey, we make thousands of percentage points, and then not tell you anything about the ones lost, then I would have said every time it pulled back, add, double, quadruple, and by the time it gets to the top, you haven't got less, you've got 3 or 4 times more. That's the way to be a billionaire, but at the same time to be a bankrupt. So I'm trying to do the middle ground. Sometimes it works, sometimes it doesn't. So let me just do this real quickly. So the IWM, I'm watching it. You see how it's stalled around here? It could have a bit of a pullback. That weekly chart has been improving. It's not great, but it's really good. and the stochastics at 93%. So there's going to be a lot. If we finally get our sell-off, there's going to be a lot to buy, and that's what we're trying to do. That's why I've rotated into different things. If they get taken out, we'll just have more cash to put to work if we get this pullback at some point. But you've got to have the bad news to sustain it. You're going to have these one-offs. We had so many. We remember the rule now is that there's no 1% pullback, more than a 1% pullback in the S&P for months and months and months. You will get it. But when? That's the question. And we want to be prepared. That's all. All right. With that said, I'm going to hand you over to Steve Rhodes. I'll be back with Tommy a little later on. And just watch this closely. The Dow's down 155. If by the time I'm interviewed, let's put it this way, by 2 o'clock, if the Dow is holding a minus 150 or not, and the S&P, now it's only down 2, but if the S&P increases to a minus 12, now you're starting to get the action that says, ooh, it's going to be really dependent on what Powell says tomorrow. That's going to be quite important for the markets. Have a great day. We'll see you later on with Tommy. Check out my opening call daily newsletter.